Hey everybody, welcome back. Sive here with the Forex Peace Army.com. Let's have a look on euro currency again. So yesterday in general it seems we were right that some Middle East conflict should leak into the inflation data in the United States. So we see that CPI numbers have been released slightly higher. So in general the nominal inflation is coming back to the 4%. This is even including the fact that the calculation method was strongly adjusted. Let's call it as adjusted, and probably doesn't include a lot of stuff that should be included. And actually, I suggest that inflation even higher there. So that, of course, make impact on dollar and euro currency. So everything as we have discussed. As a result, you can see that market has dropped and dollar has moved slightly higher. So the byproduct of this performance on the euro currency, you could see we've got this bullish grabber, which is not quite reasonable in current situation based on a recent background and overall performance that we see in this area. This is not, well, it seems a bit irrational in current circumstances. And if we carefully will take a look at the cross-market analysis, in particular speaking on the dollar index, this is futures on the euro currency, which supports and confirms this grabber. But if you take a look at the dollar index, you could see that we do not have any grabber. So this upward performance, we don't have it. All grabbers that have been formed here in favor of the bullish dynamic still stands. Correspondingly, the big hand shoulders pattern that we were talking about here also stands in place. It's more evident on the weekly chart, so I will show you. But probably you remember because we talked about this pattern a lot in the recent time. So here's this pattern, and you could see it's forming on the weekly chart. Correspondingly, I wouldn't rely currently on this pattern, especially based on the type of action that we see on intraday charts. Here, you could see what has happened. The wedge pattern that we discussed recently collapsed. And in general, if you take a look what has happened in this area, so market 4 times have challenged this area. And actually, you could see on the daily chart how it has happened with the Monday open. So first it was here, then market open, returned back to this top, and on the next day it collapsed. Also pay attention that here we have equal tops, so it means that in this point the activity of the bears are increasing, and it just holds this level around 118, 117, 90, preventing market from the breakout. That looks in short-term bearish. Finally, our suggestion on a failure of this hand shoulders pattern has worked perfect. So as we said, keep an eye on this is bearish pattern. This is not bullish. I would suggest it's drop. If it will be drop here, it means that it will drop lower. And you could see what is going on. So market currently is just dropped back to the head bottom, minor pullback. Now it's keep going lower. So it seems that on the euro currency in the nearest time, we probably should get some downside continuation, which means that although this shape doesn't look really accurate and good, potentially it could work, because we see that on the dollar index on the weekly chart, the hand shoulder is still valid, and market slowly starts moving with it. Our triangle pattern that we discussed recently here also has been broken up. As we said, this is not bearish performance. Keep an eye on a possible breakout. Besides, here also was a grabber that has been worked. So this one here, it has been completed. Market jumped above this area, and you can see market's trying to keep going. So that makes me think that in the current circumstances, it's better to not consider any new long positions on euro currency. I would rather keep an eye on the possible retracements, some pullback, just to take the chances on the possible short entering. So that's probably what we see on the euro currency for now. Supposedly the next destination point, if everything will go with this plan, should be back to this area. So somewhere around 116.60, 116.50 is probably will be the next destination if nothing will change in nearest time. So because Donald Trump, as you know, takes the visit to China, some extraordinary statement might follow, and that also could make impact on overall performance. But for now, a picture looks bearish. Would not consider any new longs, and based on the picture on the 4 time frame chart, more probable that the next destination point will be somewhere around 1660 area.